welcome to House of Bitcoin. We are diving deep today. We've got quite a stack of data here, charts, metrics, the whole lot from the latest CoinGecko 2025 Bitcoin report.
That's right.
And our mission, really, is to cut through the noise. We want to pull out the biggest, maybe the most surprising takeaways about where the Bitcoin ecosystem actually stands as of, well, early 2025. This isn't just another market update. We're aiming for a proper synthesis, focusing on the data points that genuinely define things right now.
And it's a complex picture, isn't it? What this data really gives us is a snapshot of Bitcoin's, let's say, dual identity.
Okay.
On one hand, you've got this high-performing, volatile asset, but on the other, it's this technology that's maturing incredibly fast, getting institutionalized.
Right.
So our job is to connect those dots, show how the market performance lines up with the network's health, its security, and this huge wave of corporate and even sovereign adoption we're seeing.
Exactly. And for you, the listener, our goal is pretty straightforward. Walk away feeling confident you understand the trajectory up to this point. We'll skip the heavy jargon, focus on those aha moments,
Yeah, the insights.
The things that really show the market's pivot points. It's about knowledge transfer, really.
Yeah.
Being able to look at a chart and get what it means, not just the numbers. Okay, so let's get into it. Starting with the big one, raw performance. Looking at this comparison chart for the year leading up to early 2025, Bitcoin's return wasn't just good. It was, well, huge, up to 200% plus maybe.
Astronomical is a good word for it. It completely dominated everything else.
In every major asset class.
Pretty much. When you line BTC up against the traditional pillars, think S&P 500, the NASDAQ,
Okay.
or commodities like crude oil, gold, even major bond indices like TLT, or currencies like the dollar index, the DXY,
Yeah.
Bitcoin delivered the highest returns, period. The sheer scale of that outperformance, well, it makes it tough for traditional finance to just ignore it anymore.
But that kind of upside, it always comes with risk, right? That volatility floor. Does the report give us historical context on that? Or is this 200% plus just, the reward for taking on massive risk?
That's absolutely the necessary counterpoint. The return is huge. But yeah, looking at the longer-term chart, say April 2013 to April 2025, the volatility is extreme. We've seen prices shoot up, testing levels near $140,000.
Wow, 140K?
Yeah, but then followed by sharp, really gut-wrenching corrections. That $140K figure, though, it's key. It sets a new psychological bar, shows the market can reach these previously wild valuations within a cycle.
And the trading volume that came with that peak, was it thin air or real substance?
That's what's interesting. The trading volume scaled up right alongside the price. In the later parts of the chart, you see volumes fluctuate, but sometimes spiking way up, hitting the $200 billion mark on that scale.
200 billion.
That's not just high interest. It means incredible liquidity, real market depth. The system can absorb huge trades without instantly collapsing. That's a sign of maturity, even with the volatility.
It also gives us a clear way to measure shocks, doesn't it?
Yeah.
Like looking at the flow dynamics chart.
Yeah.
You can literally see the impact of something like the FTX collapse.
Exactly. A sharp negative flow shown right there.
Yeah, it looks like somewhere between, what, minus $1.5 billion and minus $1 billion.
Precisely. That data quantifies it, shows how these network or exchange events immediately translate into billions moving, sometimes leaving the centralized platforms altogether.
It's a measure of shock, but also maybe recovery.
I think so. The system took that hit a multi-billion-dollar player vanishing, and eventually it continued climbing. That shows some serious resilience, however painful it was for those caught up in it.
Okay, so we've got the high-flying market performance, but is it backed by anything real? Is there tangible adoption, network security, or is it just, hot air?
This is where it gets really fundamental, I think.
Looking beneath the price.
Yeah.
The network's health.
Yeah. The growth in active addresses over time, say from 2010 right up to 2025, that's proof this is more than just speculation. The chart shows active addresses peaking near 1.4 million in the recent data.
1.4 million active.
Wow. And total addresses hitting around 45 million in these later years. If you want to see how Bitcoin's actually growing, that's a key metric. It's real user engagement.
But are these active addresses doing anything meaningful? Or just tiny amounts sitting there? How does it translate economically?
Good question. That's where looking at the distribution of holdings helps. We can segment addresses by how much BTC they hold.
Right.
And yeah, lots hold tiny fractions. But the biggest segment, by far, is addresses holding more than 0.1 BTC.
Okay, greater than 0.1, how many?
Around 2.5 million addresses. And that's not just pocket change for most people. It suggests a significant commitment.
And what about holding a whole Bitcoin or more? Is that group growing too?
It is still very robust. The data shows around 1.5 million addresses holding more than one BTC.
1.5 million.
And that's a critical sign of maturity, It shows Bitcoin isn't just a lottery ticket for everyone. Millions see it as a serious, maybe long-term store of value.
So widespread conviction, not just whales.
Exactly. It de-risks that narrative a bit. Millions of entities making conscious choices to accumulate.
And all that value needs securing. Which brings us to hash rate. That chart is just relentless upward climb.
It really is. Peaking near 1,000 THs, that's a million terahashes per second in the mid-2024-2025 data.
Million THs.
It's maybe the least speculative metric we have. It represents real-world investment. Millions, billions probably, sunk into specialized hardware, power, security.
The miners securing the chain.
Yeah, that peak signals enormous confidence from them that their investment is worthwhile long-term. Security isn't free. It comes from massive ongoing capital spending. So if you connect this increasingly secure, widely adopted network to the bigger picture, well, the defining story of 2024, early 2025 has to be the institutions piling in.
Right. They finally wanted a piece of it.
And the main vehicle, those new U.S. spot ETFs, that just changed everything.
The flow data there is pretty wild, isn't it?
Yeah.
Just incredible net positive flows into the new ones like IBIT, FBTC.
Yeah, huge numbers. Net flows reaching over $1.5 billion for each of those.
$1.5 billion each.
That's basically fresh, traditional money being swapped for on-chain Bitcoin exposure, coming from people, institutions, who maybe couldn't or wouldn't touch crypto directly before.
And at the same time, you saw the opposite with GBTC, right? Big outflows there.
Exactly. A massive net negative flow from GBTC. It acted like an exit ramp for earlier investors' funds, long-term holders maybe who were stuck in that older trust structure. Once the cheaper, easier ETFs launched, they took profits or just restructured. The market basically reorganized its preferred custody method almost overnight. A huge pivot towards traditional financial plumbing.
And it wasn't just funds. We saw corporates treating Bitcoin differently too. Not just a gamble, but like a core treasury strategy.
Well, some definitely are.
The data's clear there.
Yeah.
MicroStrategy is the obvious, extreme example. Holding. What is it now?
208,109 BTC, according to this report. It's staggering.
208,000 Bitcoin.
Their commitment is just something else. But the strategy makes a kind of sense, doesn't it?
How so?
It turns MicroStrategy itself into a kind of Bitcoin proxy stock, gives traditional equity investors exposure, and arguably it de-risks their corporate debt by tying the company's value so closely to the asset's success. Risky, but strategic.
Okay, but MicroStrategy is unique. How widespread is this, really? Tesla's holding is much smaller, right? Around 10,769 BTC.
True, much smaller. But Tesla holding any significant amount proves the acceptance is broadening, even if the scale differs.
And others too.
Yeah, the report lists other public companies holding Bitcoin, especially those in the ecosystem itself, like Coinbase, Wyatt Platforms, CleanSpark.
Ah, the miners and exchanges.
Right. It helps cement Bitcoin as an accepted, if still niche, reserve asset for public companies. And think about it, auditors have to sign off on these holdings now. That's a big step towards normalization.
Zooming out even further.
Oh.
Sovereign holdings. Governments.
Yeah, that's another layer. Data here is often murky, obviously. But the chart of public and government holdings is fascinating. It shows the U.S. holding the largest disclosed volume.
Over $1 billion worth, according to the scale here.
Seems so. Now, much of that might be from seizures, asset forfeiture.
Sure.
But the fact remains, the U.S. government is a massive Bitcoin holder. And you see smaller strategic holdings listed for others like Germany, Bulgaria, Finland, El Salvador, of course.
El Salvador's adoption being very deliberate.
Very deliberate, yes, a nation-state strategy. But the U.S. holding the most, even passively. It speaks volumes about the geopolitical reality. Bitcoin isn't just some fringe ideal anymore. It's an asset states are tracking, holding, maybe even strategizing around.
Interesting tension there. The biggest known holder is a centralized government.
Exactly. Using an asset designed for decentralization. It's quite the dynamic.
Okay, so we have retail users, corporations, even governments involved.
Mm-hmm.
Where is all this activity actually happening? Where's Bitcoin being held? And what's new on the tech side?
Right, the plumbing. Looking at exchange reserves, concentration is still very much the theme.
Binance still dominant.
Yep. Binance leads by a distance in total Bitcoin reserves held on the exchange, near 632,457 BTC, according to this data, followed by Coinbase, OKX.
630,000 Bitcoin just on Binance.
It's ironic, isn't it? Despite the whole not your keys, not your coins ethos, the reality is most day-to-day trading and liquidity remains concentrated on a few big centralized platforms for convenience, for depth.
And I guess that's even more true in the derivatives market, where the really big bets are made.
Absolutely. Binance, Gate.io, Bybit, they lead in derivatives volume and open interest. And it's crucial for you, the listener, to see what dominates there.
BTC contracts.
Overwhelmingly, BTC USDT pairs, specifically stablecoin pairs, just dwarf everything else. ETH USDT, SL USDT, in both volume and open interest.
So Bitcoin is still the main event for traders.
It confirms Bitcoin's role as the base layer, the reserve asset for the whole crypto trading world. Its volatility is what the leveraged trading ecosystem really orbits around.
Okay, let's pivot from the exchanges to innovation on the Bitcoin network itself. The transaction type data shows something interesting.
Right. Regular transactions dominate, sure, but there are these new spikes.
Yes. This is where you see the sort of decentralized energy pushing back, innovating on the core protocol. The emergence and, frankly, the explosion of new standards like runes and BRC-20 inscriptions is a huge development.
Popping up really sharply in mid-2024 data.
Exactly.
Remind us quickly, why are runes and inscriptions such a big deal?
Well, basically, they let people create and move other kinds of assets, think tokens, NFT-like things, directly on the main Bitcoin blockchain. Things previously only really possible on smart contract platforms like Ethereum.
Okay.
So it drives new uses, new development. But crucially, it also increases demand for block space, pushes up transaction fees.
Making the network more economically active.
Potentially, yeah. More valuable for miners to secure. It shows there's real demand to build more complex things using Bitcoin security as the foundation. And alongside that, we're seeing the rise of stake BTC. That's a totally different kind of innovation.
Completely different vector, yes. This tackles the problem of Bitcoin just sitting there, idle in a wallet.
Putting it to work.
Exactly. We're seeing new products emerge. The report mentions things like LBTC, Solve BTC, Una BTC, and key events like Babylon launching its staking mainnet or developments around trustless BTC vaults.
And Lombard deploying LBTC on Sui.
Right. It's all about letting users earn yield or use their Bitcoin as collateral without needing to trust a centralized party or bridge it to a potentially less secure chain. Trying to leverage Bitcoin's own security for DeFi-like applications, it adds a whole new utility layer. #outro.
Wow, okay, that was quite the journey through the data. Let's try and synthesize this. We went from just incredible financial performance outpacing everything
The 200% plus.
to seeing massive user adoption, millions of wallets holding real amounts, then this huge structural shift with institutional ETFs pouring money in, corporates adding BTC to balance sheets.
Right, the institutional wave.
And all while the core technology keeps evolving with things like runes, inscriptions, and now these native staking protocols.
Yeah, the data really paints a picture of an ecosystem maturing, maybe professionalizing, but on two fronts that seem almost competitive.
How do you mean?
Well, you've got the centralized financial giants, the ETFs, the corporate treasuries, basically competing for custody, bringing Bitcoin into the traditional financial world.
Oh, what?
But at the same time, you have this bottom-up, decentralized innovation. The runes, the staking ideas, trying to enhance and build directly on Bitcoin's original protocol. Centralization versus decentralization playing out right there.
That really sets up a fascinating final thought, doesn't it? For you listening to maybe mull over. Given this huge amount of Bitcoin that's now clearly being held, custodied by publicly traded companies by these massive institutionally managed ETFs,
Yeah.
how does that growing centralization of ownership, of custody, really sit with Bitcoin's original vision? You know, the whole decentralized peer-to-peer electronic cash idea.
What happens when Wall Street essentially owns a huge chunk of the world's most famously decentralized asset?
Exactly. Something to definitely think about as you navigate the market going forward.
Crypto high, can't deny, riding waves as markets fly from Bitcoins and Ether's light. We're trading through the night. Wallets loaded, keys in hand, navigating this new land. Blockchain beats, the future's here. In this ledger crystal clear. Crypto high, can't deny, riding waves this market fly from Bitcoins and Ether's light. We're trading through the night. While it's loading.